if you could just summarize it, what do you think that big concern is around the advisor and the idea of investing in a cryptocurrency?
So shout to my Bitwise family, Matt Hogan and the gang over there. They did a study of advisors, and we've done our own as well. The main one is regulatory clarity. Right now, the SEC says that Bitcoin is not a security. The CFTC says that Bitcoin is a commodity. The IRS says that Bitcoin is property. It would be nice if the SEC, CFTC got together and told the RIA space, hey, not a security, but will be regulated as one, right? And I think that will force a lot of the larger RAs to move. Regulatory clarity, volatility, right? Volatility is less, and advisors don't even know what volatility to really be concerned about for a lot of different reasons, right? Should be more about it's volatility of price, but should be volatility of price discovery. I have a webinar coming out with FTSE Russell and digital asset research where we talk about the volatility of Bitcoin versus other assets and the volatility of the price at any point. And again, I'm rarely stunned with stats in the crypto space. I've heard it all, seen it all. At any point, you check the price of Bitcoin across exchanges, it could be off sometimes as much as 2%. That is astounding, right? That volatility in the actual price discovery. Now, with that said, the volatility of the actual price in the asset, advisors being able to show a client, well, Mr. and Mrs. Client, you see these 80% drawdowns here, right? Like, are you okay with that? And then pairing that with the risk tolerance. I tell all financial advisors, the minute your client opens their mouth about crypto, go back to day one, reprofile that client. Mr. and Mrs. Client, you said you were a 2 on risk tolerance when you first came in. Now you're asking me about Dogecoin. That's a 14. What changed? Right? Like, and you talk about that and you pull out that investor policy statement and you pull out that financial plan and be able to do that. That's 2. The third one is market manipulation, right? Or speculation, speculative asset. Let's pair those 2 things together. Being a speculative asset, yes, it is, right? And the market being manipulated to some capacity. Yes, it is. Now, as we get better prime brokers, as we get transfer agents, as we get better, liquidity in the markets, hello, those who want an ETF, all of those different things, now will be easier for a financial advisor to step into these markets. And again, and here's what we need to understand when we say financial advisor. If I'm a financial advisor at a wirehouse versus a registered investment advisor, 2 totally different conversations. And by the way, the most astounding thing in this space that happened in a very long time is that at this moment, advisors at Morgan Stanley could buy Bitcoin for their clients before some of the largest RIAs in America. Astounding news. Do not diminish that. But go back to the conversation. So now I am a registered investment advisor, which most of the folks listening to this are. Am I a financial planner? Am I an investment manager? Do I want third party? Do I like using, portfolio management tools and using other managers and things like that? So when we say advisor, we need to broaden the scope there of the concerns that an advisor would have. If I'm an advisor that runs a $2 billion, $3 billion firm, you think I'm taking the risk for a 1% allocation? That makes no sense. They're not going to do it. My mentor has a multi-quadrillion dollar firm up in Boston. He won't even talk about crypto. He's like, why would I go through all that hassle for a 1% allocation? And by the way, that's nonsense too, because how is it you have conviction about something and you're only going to put 1% in it? Sure. Most financial advisors right now shouldn't be doing anything in crypto. They should be learning. They should be preparing their practice, updating your ADV, your E&O, making sure that you have crypto assets, copies of crypto assets, right, on hand to give clients. You should be making sure that all of the things that the SEC just said in their risk alert a couple weeks ago, right? Hello, Hester Pierce, come by the campfire, folks, right? Again, policies and procedures, books and records, custody, there it is again. Valuation methodology, which is the last point of this. Financial advisors, right, as a whole, how do I value this, right? No intrinsic value. You hear that, right? Capital asset pricing model and all these PE ratio and discounted cash flows doesn't fit here. So you have to bring in you can't bring those old tools to discover new assets, right? So valuation methodologies, there are plenty of methods to value Bitcoin. Advisors just don't know them. I'm saying all this to say 99.9% of advisors are blind. I said this in my live the other day. Not only are they blind, They needed to slow down. They don't have the research. They don't have the planning tools. They don't have the education. They don't have the certifications and continuing ed to make them feel comfortable sitting in front of clients. I will put the bow tie on this with this. When I first took the job as the CEO of Onramp, and I was blessed at that time to only have an email relationship with Cheryl Penny. Cheryl Penny emailed me, said, fantastic. Don't really care about your little crypto trinkets over there. But I can tell you this, if you want to be successful, make advisors smart, educate them, right? And that's what I did. And we, in our wait list now, right, we've sent out a bunch of stuff to advisors, a Bitcoin compliance guide, all of our research. What is, the primers and the basics on crypto, on NFTs, on this digital gold narrative, right? All of these things. So advisors go, oh, okay, for advisors, by advisors. So I think when you look at, just to rehash that, the regulation, the volatility, the market manipulation, along with the speculation, and then just education, period, for the space overall, right? And then you have the actual advisor base. I hear from CIOs all the time. They call me all the time, Tyrone, we can't even talk to our clients about it because I have an army of CFPs who know nothing. So if the clients call, we don't even have the resources to say anything to them. So we're way, way, way behind as a space. So I think advisors now need to get it to slow down, read, educate yourself, tell the clients, whether you're yay or nay, I don't care.
Sure.
But be a fiduciary and be able to speak to it and tell the clients, no, we're not doing anything, but we're reading, we're learning, we're looking into it. Or if you are going to do it, you follow all of the guidelines that the SEC just put out in that risk alert, so that if you're doing it in a way where, as Josh Brown would say, you don't get sued into the Stone Age.